Yo guys, what's going on? Welcome in. So, welcome to video 2 of this little mentorship that I'm putting together, course, whatever you want to call it. Today for video 2, I strictly want to introduce order blocks. Most of you should know what they are, but I just want to go over an order block and then what I consider mitigated and unmitigated and how I use them as targets for navigating these markets. So, to show that I'm not just picking some ICT crap out of nowhere and hindsight. I'm going to just do what I regularly do, and just have a random date generator, and then we're going to go to FX replay from there, and we will then go from that date to show that I'm not just picking some hindsight crap to spew to you guys to make it look like I know what I'm talking about. So the date it's given us is April 14th of 2024. So let's get this date put in here. So 24th, 15th. The 14th fell on a Sunday, so we'll just start with the 15th here. Um, let's go with an end date of somewhere in here, and we'll get to the charts. So I have another order block video. I'll go over basically. I mean, everyone that's watching this video should have an understanding what an order block is. If you do not, please go check out my other order block video. I will post it in the description below. If you have not, highly recommend that. But just in terms of for this video purposes, I'm just going to stick to the New York session. We know it works in the other sessions as well. Might actually work better because of the less manipulation that happens during the New York session. But so this, I'm just going to stick to the. I'm just going to go to the next day open, and we're going to go right from open here. So I'm going to start over here. So what is an order block? An order block, a bullish order block, is simply, you guys should know this, it's simply a down close candle that is then preceded by an up close candle. So this candle right here would become a bullish order block as soon as this candle closed above it. So we know there's bullish orders sitting inside of there, and we expect price to return to that area at some point to mitigate it. It doesn't mean that this candle could be left here for years, and then we eventually come back and we'll fill it. If you're watching this video recently, as in like early April of 25, you will you'll notice we're in a big downtrend, right? On even on the weekly on all the indices. And you'll notice we're coming down to weekly untapped order blocks. So that and it just shows you like we can go years without coming back for it. Not saying that we're going to go and come back and bounce back to all-time highs from this tiny order block, but you expect some kind of bounce here, right? Usually, if and then if not, I'll show you guys where to target next. Just gonna be another unmitigated order block. So that's a bullish order block, and then a bearish is just the opposite. It's gonna be an up close candle, such as this one right here, and then as soon as we close below it, right here, this candle closes below it, it becomes a bearish order block, right? So that's a bullish order block. That's a bearish order block. Simple as that. We can use these to enter the market. We can use them as targets. We can use them as trailing stop losses for our current positions that we're in. If you're in a long, you wouldn't want to see price blowing through this bullish order block here, right? You have down close candles right here. You would not want to see price blowing through here, or it's probably coming back to your entry. So that's basic terms what an order block is. How can we use them now? So mitigation versus unmitigation. Mitigation simply meaning that an order block has been tapped into by a candle that happened after it was formed. So this bullish order block right here, let's zoom in a little bit here. So this bullish order block right here, this guy, This is an unmitigated order block. What does that mean? It means at some point we expect price to come back here, and we can possibly look for a long entry off of it, depending on structure and everything else. Which I highly recommend. If you have not watched video one, please go watch the market structure video, because using order blocks in conjunction with and being on side of the current market structure is going to give you much higher probability on your setups. So obviously, so we would expect price to come back into here. This is unmitigated because there's nothing that is tapped into it. My rule for mitigation is really I want to see it tap into like 25% of the entire order block. So in this case, like maybe the body of this order block. Sometimes you'll see it come down and we'll tap like just the top wick of it and then go. It's technically, I guess, mitigated, but it's still a spot where I would consider it unmitigated just to be safe. If I was targeting that, if I was in a position or something, maybe that's where I go break even or something. But we'll get into that shortly. But in terms of this, if you watch the structure video from last week or the week before, can't remember when it came out. This would be your structure, right? A 1 minute order block to the downside here. Why is this an order block? Order block because it's a up close candle that had a down close candle close below it. That makes a downswing. And then we go up here. We break structure down here. So technically, our structure went bearish here. I would if I was looking for a longer thing, I would want to see this area tapped into. We'll see if it gets tapped into later. But remember, these are unmitigated, and what I talked about, we'll keep this marked. We'll keep it marked and see if we come back to it later. But like, I would expect price at some point to tap back into here. It's like basically longing with equal highs or equal lows. Essentially, like it's going to be a draw for a price. The more you back test, like I said, the most important thing is you're going to have to back test and just see it for yourself, or just see it with screen time, or you probably see it a lot, already if you're in the live streams, because we talk about this every single day. But so you would know that obviously this is bearish structure here, because of this. So usually we would be looking for price to get down here and then maybe look for a long setup down here, but we did not get that there. And then price obviously breaks back up to the upside here. This would not be a swing down. Why? Because you're not drawing stuff inside of the last recent swing. So this would be so then your structure breaks back up to the upside here, right? But going back into this, I got a little off course there with mitigation, and went straight into market structure. But unmitigated, right? Let's just get rid of this for now. Unmitigated order block right here. This is a mitigated order block. Why is this mitigated? We closed below and we had a candle tap back inside of it. It at least hit the body, so I would consider that mitigated. Like I said, 25%, especially if it's like got a wick or something like that, or the body, I feel like can be considered mitigation, because then those orders should be filled. I mean, just from what I'm seeing, that's what I like to see personally. I don't know if there's really a true definition for it, but we just know order blocks like to be retested. So this one would be mitigated. So this one would have we would not be expecting any kind of like major retrace or something off of this. If this gets close above, we look left and see, okay, what's mitigated to the left that we know price is drawing to. So in this instance, this would become, so obviously we have up move, we have unmitigated order block. So let's mark out all of our unmitigated order blocks. Unmitigated. So this is unmitigated right here, right? Closed above, never got a retest of it. And then we obviously break structure to the upside. Now, as we keep pushing up, you'll see what happens here. Eventually, we come up here, we leave. We looks like we close above, we leave this order block here, right? I don't want to go into too much detail. I'm trying to save this for the other video. But you'll see once we get a 1 minute order block to the downside, like even in this case, you get a 1 minute order block to the downside. You expect what? A move back down to, obviously we are, this candle already tapped into it as soon as it closed below, but you expect a retrace to the last unmitigated order block. And then obviously we get there. Looks like we hold. Notice that we never close below this order block though. We never close below it, below the wick. We never close below it. Price stays bullish. You don't want to get bearish until you start closing below there. We close below here, this order block. Where do we expect price to go to? We expect price to go to where? The next unmitigated order block, right? Because we know this market loves to move order block to order block. So notice that, and notice we get down here. So where's our last unmitigated where's our last unmitigated order block? It's right here and to here. And what else do you notice? This is where structure comes into play. Obviously, we had down move, up move. So as soon as we close below this low, what? Our structure is breaking to the downside, right? Structure's breaking to the downside. So now we're breaking below here. We have broke below here. We expect nothing short of the market going to the next unmitigated order block at that time. You'll see we obviously broke down here with this candle right here that closed below, right? Closed below this market structure shift, right? So we expect price to go to where? I would expect it down to here, maybe get a long off of there. You see we get, what's it do though? I mean, anybody that was short, market maker sell model, right? Anybody that was short didn't get filled here. Obviously they might have held, who knows? It doesn't matter. We're not in the sake of that for this video. But notice what happens. We go up to what? We go up to unmitigated order block. And like I said, you guys can take any single day out there and go and look at this, and you can see where price moves to once we start blowing through an order block. If you blow through an order block, look for the next order block. It's that simple. So structure's still bearish here. Like we don't get right, because there's not an order block to form here to form an upswing. So here we finally break structure down. We come down to unmitigated here. Price then moves back up to what? This order block. I'll explain this order block in a later video. The next video we'll go over the importance of these order blocks. Those in the Discord know. But you see, we get a move up here. However, if I was watching price and I see us, even with bearish structure, and I see us close back above this, where do I expect price to go? Back up to these unmitigated order blocks. That's how I read price. If price closes above here, I know this market's not just gonna it's not just gonna soup here and reject. I guess it wouldn't soup if we closed, but I would expect price up to here. So if we got like some kind of pullback down, I could then look for a long, because I know price wants to deliver up there. So then you see, obviously we hold that order block, right? You could look for maybe a 1 minute order block off of here if you wanted to, because this order block's holding, right? This order block's holding. You could look for a 1 minute off of here or some kind of other model, which those two main models that I use, and we'll be looking at those in a later execution video, how to enter off of this. But for the sake of this video, just strictly want to stick to structure and order blocks and how I read where price is going to go to next, right? So if we're following our structure, obviously we're still bearish, right? We didn't close above here. We just get a little 50% retrace back up to an untapped order block. This order block holds, gives us a 1 minute prop block. A prop block is just an order block that is formed off of an order block, and then you expect expansion down off of it. Like I said, you can absolutely look for a short here and look for this to hold. And then what? And then you're targeting at least what? As soon as we get this order block, obviously we're already close to this candle, but you would expect It's not something here. Can this price hold? And we just chop, and go order block, order block. Absolutely. You'll notice that in chop, right? You'll notice that in chop all the time. We just go order block, to order block, and then just side to side. But let's clean this chart up a little bit here. So obviously, bearish order block is formed here. We have a bullish one here. If we violate this order block and we close below it, and we not only are we breaking structure, right? We're breaking structure back to the downside. We then look for what? You would look for the next unmitigated order block. Next unmitigated order block would sit there. Obviously, you see we come back down. We do deliver back down. We break structure here to the downside, but obviously the candle that broke structure down already tapped us into that order block. So what we can expect some kind of potential retracement here. Doesn't mean we have to. I mean, obviously, if we go down and close below that, we look at what? Oh, the area we talked about down here, right? So that's how I would be reading it. But the real question is, how can I get in? How can I get a setup up here? And then target, down here. So that'll come with the kind of the execution video, but you're basically just going to look at unmitigated order blocks and mitigated order blocks. So for like this move, let's get rid of this structure. I feel like it's making it confusing. So obviously we're bearish. I mean, bearish structure here. We're not bullish until we close back above this high, which shouldn't really matter here in terms of what price is showing us. But how would I know from down here that I could target this potentially? Because you see what happens, right? I already see what happens. We come up to these order blocks and reject, right? So I don't know if we took that high or not. Let's mark this out and see if we took that high. I don't think we did. Yeah, we left that high. So we got relative equal high sitting up there. But look at the retrace you get off of that. Anybody that had their TPs up at that high had either serious drawdown. We'll see what happens here. I don't want to give too much away here. I want to continue to try to keep this realistic as possible. But okay, so what I'm looking at here is how can I target this up here? Well, what do I see? What do I see to the left? Right, we know that our left side of the curve is what forms our right side of our curves, right? So if we have this move, our pullbacks and stuff on this side, on the right side, are going to be formed by fair value gaps, order blocks on the right side. That's what gives us our 50% retracements, and then continues our our market maker models. So we know that. So how can I know that we're in a true model that's going to take me back up to like a high way up here? How can I tell? Oh my gosh! All right, let's click off of there. So what I look at, right? Same thing I was talking about before. If we close above this candle, I expect to move up here. If I close below this candle, I expect to move to what? Down to this unmitigated order block. Well, what do I see here on the, like I just talked about? What do I just see here in this mini sell model buy model? What do I see? I see obviously this order block right here was already tapped into. It's already mitigated, right? We already tapped into it. Price is not going to come back above, close above this high, and then just instantly go straight back down, right? It's not. It's 9 times out of 10, it's not going to happen. We're coming back up here to close above to go to what? To go to another mitigated order block, right? So what do I see? I see this order block here, right? We formed it. We just blew right through it, right? We had no reaction to it here. We didn't mitigate it. We might have mitigated it right there, but doesn't matter. We just closed straight through it. What else do you see? I see this order block was already mitigated here, right? By this candle was already mitigated. So all this entire range is mitigated. The fact we're getting a 1 minute order block here and price is holding it, I'm already expecting us to run up to at least this high, right? And the fact we just closed above all the mitigation highs and lows. So your mitigation highs and lows are just your highs or your lows that dig into the order block, right? So this is a mitigation high. This is a mitigation high. It's just your highs that dug into the last order block. If you see price closing above it, you target the next unmitigated order block. So from down here, if you, even if you took this 1 minute order block, or you find whatever lower time frame setup you like, I would 100% be bullish up to this high. If I get stopped out, I get stopped out. But I know from my back testing and everything that this should absolutely get ran. And I would be targeting more than this, right? Because this is our mitigation high inside of this order block. So like there's no reason price is going to come back up here, soup this, and go right back down. Price is going to run up to where you see we get a run up right up to our order blocks over there, right? So that's how. Just pay attention to your order. If this was if this was unmitigated, right, we could absolutely come back up here and then retrace all of the way back down. That's the spot where I like. So say this was unmitigated, right? And I took a long from down inside of here somewhere with one of the extra entry models that are coming in a later video. I would at least be long up until what? I'm always targeting the first unmitigated order block. So you see, we're gonna move up into there. This is where I could either go break even, and then see if price comes back and tags me, whatever. I'll live to trade another trade, or I can stick to my original stop. That just comes down to you as a trader and your personal risk management tools. But in this case, I would honestly be looking for this for these order blocks up here. It's an origin of the move that sent us down. It's an area that will absolutely be retested at some point. And the fact we're blowing through all these order blocks, I don't see anywhere else where price is going to come up to reject and then send us all the way back down. So that's why I would expect those order blocks. Just look left, look where your mitigated order blocks are. If you're blowing through them, if you're closing over them, then expect look for your next unmitigated order block. So that's essentially that. Let's see here. So same thing coming back down. So obviously we get like a 1 minute order block here to the downside, right? Your last up close candle, you get a close below. Potential entry model. I mean, I probably wouldn't have entered this just because obviously we left those highs. But I understand we could get some kind of retrace. So I'd be looking for, okay, where can I expect price to go to? If we get a 1 minute order block to the downside, where I'm looking right at my unmitigateds, right? Obviously this was tapped. Wasn't really dug into though. This is kind of that instance where I say like, it's kind of like a gray area whether it's mitigated or not. Just because we just hit the wick, like we didn't really get a good dig into it. But 1 minute here. So I mean, this could be an entry model if you're not afraid of the relatively equal highs up here. Potentially, then you just want to see a close above. A close above. That's the big thing. Candle closes are huge when it comes to watching order blocks, right? Because if you start closing above mitigation highs and lows, for example, it's over. If you close above, like this candle, like as soon as we closed above here, which obviously this candle ran straight into it, you know immediately where this thing's going. So that's why candle closes are important, and candle closes with market structure go hand in hand. But so I'm at this point, I'm looking left, right? And I'm like, okay, say I enter this short with this order block. Obviously, I know we can go down here, hold price right here out of this order block and go all the way back up. Can't say I would actually enter this myself. But if from a price reading standpoint, it doesn't matter if I'll take this or not, but from a price reading standpoint, I'm watching what? I see these order blocks are mitigated here, right? We finally came back down and dug and got a dig deep down. These ones were already mitigated, right, by these lows. This one, we had a candle close above right here. This candle dug back inside of it pretty deep. And so at this point, I would be expecting, like, if this thing's going all the way down, we're not just going to stop here. we're not going to stop at this order block and go all the way back up. We're going to go down to that original area we talked about down here. And I mean, by all this, like, you see, like, we're closing below all these order block lows. Like, there's no reason for price to fully reverse here. Does it happen? Absolutely. Like I said, the market's not 100%, but most of the time, this is what you're going to see: is the market's going to move from order block to order block, and you'll see. Let's see. I'm gonna say so we dig it. Where are we at? Oh, it's 13:30. Oh, I think I'm on the wrong times here, but let's go to New York just to. It might have been New York open, but just judging by the size of that candle. But you see there, we come back down to what? To these order blocks. And we mitigate into there, come down into. This is where, like, it's a little bit of a gray area, because look here. Let's see how we barely dug into here, but barely dig into there, and then looks like we just get a bounce basically right there. So just a little sweep back inside of that order block. So let's see what happens going into open here. But hopefully you guys are taking something from this. We'll see what happens here. So what am I noticing now is, so let's clear up the charts a little bit. Clear up the charts. So on open, this is how I would look at open for this day. If we end up closing back below this order block right here, if we came back down and closed below, or we just start closing below, actually, just disregard that. If we start closing below, just basically these order blocks, right? Because all this is now totally mitigated. There's no reason price should come back down and close below here. If we come back down and close below, I am looking for shorts, and I'm looking for this area down here, going into open, or even just 50% of the range is first target. You guys have seen those videos as well. But just, I would be looking for shorts if we close below there. So far, I mean, there's no close below there yet. We're just holding. We just came back down for mitigation of this and this. But if we close below here, there's no reason for price to be breaking structure down here. We can look for some kind of move like this on open, and then target what I just showed. What I just showed you down there. But if we start getting a 1 minute order block to the upside, we can look for longs too, right? Let's get rid of this. All right. So we'll play the opening candle here and see what happens. Like I said, if we get 1 minute to the upside, I'm looking at what? So I showed you a downside target. I'm always open-minded, really, going into open. But what same concept we had here. I'm gonna look left and be like, okay, if we get a bullish move on open, because I know we can bounce from unmitigated order blocks. What do I look at? Okay, well, I have this unmitigated order block right here. Where else do I have an unmitigated order block? I don't. Everything else is mitigated here, right? Order blocks mitigated by these candles. I'm not gonna draw as many lines because it gets a little messy. But you got 1 minute order block here, mitigated. Everything's mitigated, right? It's kind of why, like, LR, when people say LR, it works because everything's mitigated. You would not expect price just come up here and reject from here and go all the way back down, right? If we're coming up here, closing above here, there's nowhere for price to get sent back down from. If we're going up, it's going all the way back up to these highs, would be my target if we start getting bullish structure and bullish order blocks on the 1 minute off of open. So that would be my draw. That's how I'd be very open-minded and just wait for a candle closures one way up or one way down to show me. Because I would say, since this right here is our last unmitigated, I would go bullish as soon as we got above that, because everything else, there's nowhere else for price to reject, and this would be my draw. Right. So that would be my draw. So you see we get a reaction off of that unmitigated there. Like an entry model could be like a 1 minute order block off of it. We have a 15-second entry model off of 1 minute mitigation. But look at the reaction we get off of there. And then the moment we come back up and we take that high, but we don't get a candle close, right? So I'm not bullish. I'm not bullish until we get candle close above here, right? Because this is our high. Oh, this is our high. That just this candle is entirely mitigated now. But the first candle, the it's for me, it's always the first mitigation candle that digs into it. If we got a close above there, that's when I would immediately flip bullish at this point. So let's see what happens here. Uh, so we do get a close below there. So this might be one of those instances where, yeah. So we get a close below. We just dig back down into there. That's like I said, one of those instances. We'll see what happens. And then you see we push back down here, right? So we push back down. Once we got a close below, I would have went obviously bullish here. I would have went well. Honestly, it's pretty messy. But getting a close below here, I would have expected what? Us to push down, right? Because there's no reason price should be closing below these candles. This area over here. Sorry if I'm not marking this stuff out. This area over here is not mitigated, right? So, and I said we would be looking for like 50% of this range potentially for a first target, because we know unmitigated 50s are a thing, but we know we like to be delivering from an order block as well. So let's see, let's play it out, see what happens. So right now we're just kind of stuck, right? We're just kind of stuck. But everything's mitigated here. We're just kind of getting choppy here. So now we come back up and close above. So it looks like we did not get into. We just hit the first order block inside here. I bet this is probably a 5-minute order block. This is where you got to know how to watch every time frame, because you'll see what happened. We just come down and we hit the 5-minute order block, which is made up of this entire range of order blocks. That's why it's important. You must watch. You know, your higher time frame context has to come into play as well. But now we're what? We broke structure down, right? We broke structure down, but as soon as we start closing above what? All these unmitigated order blocks. Yeah, this one still matters up here, right? This one matters up here. But this high would be like what? This would be your structure break, right? Because you had 1-minute order block to the upside, gave you a brand new low off a 5-minute order block down here. And now you're breaking structure to the upside. So I could look for a long position out of what? I would expect this order block to hold. If this order block, if we close below below these order blocks, what do I expect? A return back to what? I would expect a return back to here. We can look for a short position based off of any kind of lower time frame entry model. But what you see is we actually dug. So we hit this order block already. We hit it there. So let's see. So obviously we were talking about that though, right? We can still get in this. If we don't take this high and we get a retrace inside of here, we can absolutely look for a long position still, right? Exactly what we were talking about. You get a 1-minute order block. You're closing above all of your unmitigated order blocks, right? So you're closing above them. Just telling you price is bullish. There's no other reason now. Every unmitigated order block has been closed above or tapped into already here. So there's no reason price should not run this high. So now we can look for maybe some kind of entry model, right? Let's see. So if we're gonna move down potentially back to that order block, this is where I talk about mitigation. That's actually a great example. It's where I talk about like, okay, we can tap like the top of it, but you'll see like we come back down and we tap. You see we come back down and we tap inside of it more. But actually, what I really see is I'm not a fan of dojis as order blocks. We usually end up just sweeping those candles. They're not very. There's just not a lot of volume inside them, right? It's just a doji. But you see, we come back down, we dig inside. This is where I would absolutely be looking for a potential long position, right? This is 1-minute structure to the upside. Your internal range, you'd be looking at this would be like 50%, right? And you're back to what? An order block. This is also another order block, but I don't want to give too much away going into the next video. It acts as the same way as this order block did over here. The ones in the Discord, you guys should know. But you see the reaction we get out of that one. Same concept here. Essentially, it's your last order block before you break structure. So I'd absolutely be looking for a long position here. I don't want to give away too much, but this looks really good. So obviously we'd be looking for this high, right? We'd be looking for this high. Um, and this is a fifth. So for one model, like I said, you guys get a little teaser here. For this model, we'll just close enough. It's a basically it's off. It's a 15-second BISI. We take it off of any kind of 1 minute mitigation as long as we are still bullish and we have not taken what we suspect to be buy side liquidity, which is our target up here at this blue line. We would just enter inside of the 15-second BISI. Stop just goes if we violate the candle's low below that BISI, right? So we would enter if we got a tap inside the BISI, and then we're targeting up here. Our stop would just be below there. So it would look something in line of like this. If you want to be a little more conservative with your entry, you can wait for 50% of this 15-second swing if you want. Usually, it's usually what I do. I guess it just depends on context of the thing, but I would look for something like this potentially. We'll let her play out, and looks like there's buy side. I don't know if we would have got tagged in there. If you were just long in the BISI, obviously it would have depended on your broker there. But you can see how everything played out there, right? Came back. So if we go back to our 1 minute chart, we got the 15-second here. Close up. That great entry model. It would have worked there, but we expected that, right? There's no reason price is coming back here to fully reverse out of here, before pushing higher. Right? We knew that it's probably as soon as we took this. This is another entry model, right? 1 minute order block would have been your 1 minute prop block off of your order block. Down here, you could have taken that long as well. Going back to your bullish order block, you just would not you just wouldn't want to see a candle close below it, or what if we close below that? This candle's already mitigated. You would look for shorts down to here. So that's how you use it. And then at this point, obviously, if we're closing above there, you would then just look left, right? You go to your higher time frame and be like, okay, where can I see price going to? Oh, I see a unmitigated 50. I see untapped 15-minute order block up here. And then you just continue to follow your bullish structure until it says it's not bullish anymore. But pretty long video already, so I'm going to wrap it up there. Like I said, if you guys have any questions, please leave them in the comments below. I will link the OB video below as well. And like I said, we talk about we run a Discord where we talk about this on AM and PM streams every single day. That's part of the premium. We do free live streams once a week. So there's still good content in there if you don't want to join the premium. But just wanted to get video 2 out there. Like I said, please use this in conjunction with video 1, and then look for video 3. Next week we'll be going over these specific order blocks that I talked about here. Your order blocks that form just before your break of structure. So with that, hope you guys enjoyed. Like I said, leave questions below or ask in the Discord. DMs are always open. Take care, guys. We'll see you guys next time.